You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 7th day of August, 2024. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day, to every trading day. Now, the first broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com. and click that purple button, fill out the registration form, hit submit, get your desktop set up, get your indicators indicating, and then you'll get 5 consecutive trading days. Even if it stretches over a weekend, the weekend doesn't count against you, so never worry about what day of the week or weekend or hour of the day you sign up for the trial. Today's Wednesday. If you sign up today, your trial will officially start tomorrow. So you'll get 2 days this week and then Monday, Tuesday, and Wednesday of next week. The weekend, again, doesn't count against you, even though there are markets that trade over the weekend. Now, when the live training room ends each day, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen is every trading day, you get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so all you got to remember is CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, as we're doing right now. We also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And for those of you new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year. Do the same thing. Over 2,600 daily episodes just waiting for you. youtube.com/CFRN. Our daily schedule each day for this afternoon broadcast is our devotional, word of prayer, some market news, a recap of the Logic 247 alerts, the concierge trade alerts. About 12:50, Michael will join us and give us a recap of what happened this morning in the live training room. And then we'll go live on the TradingView platform and do some live trading from 1 to 1:30. And then I'll be back. And if I haven't finished the recap of the alerts, I will. And we'll wrap things up with our good word for the day. So let's jump into it. We're starting a new devotional topic today. Crashing the chatterbox. That'll make sense to you in a minute. Today's scripture is 2 Corinthians 10, verses 3 through 6. And I'm going to share with you from the Message translation. The world is unprincipled. It's dog eat dog out there. The world doesn't fight fair. But we don't live or fight our battles that way. Never have, and never will. Tools of our trade aren't for marketing or manipulation, but they are for demolishing that entire, massively corrupt culture. We use our powerful God tools for smashing warped philosophies, tearing down barriers erected against the truth of God, fitting every loose thought and emotion and impulse into the structure of life shaped by Christ. Our tools are ready at hand for clearing the ground of every obstruction and building lives of obedience into maturity. 2 Corinthians 10, verses 3 through 6. So, crashing the chatterbox. I don't know about you, but my mind is bombarded with constant chatter that goes something like this. I can't. I won't. I'm not. I never. Do you hear it too? I have struggled with these lies of insecurity, fear, condemnation, and discouragement throughout my life and my ministry. And I have seen people I know be overwhelmed to the point that they feel hopeless and helpless to fight. Jesus calls the devil a liar and the father of lies. The devil isn't the only one feeding us chatter. It comes from our own thoughts and beliefs as well. The great news is that God has a voice in this fight, and it's far more powerful than anyone else's. We can't silence the negative chatter, but by studying God's Word, we can learn to crash the chatterbox and overcome the lies that hold us back. I hope that this devotional will help you start your fight. Believe if you commit to the next 7 days and focus your thought on what God says about you, who you are, and what you can do, the lies of the chatterbox will lose their strength. You can learn to make a daily choice to hear God's voice above all the rest. Join me in a word of prayer. Heavenly Father, thank you for always speaking to me. Help me to identify the lies that the enemy speaks to me so that I can exchange them for your truths. I trust that you will equip me to crash the chatterbox within my own mind. It's in Jesus' name we believe and pray, and everybody said, Amen. See, in the discussion groups, some folks are having difficulty connecting to the GAIN servers. Bert, if you're out there, I'm sure you're aware of it. If you can give us an update and let us know what's going on, we'd appreciate that very much. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 191 points. The NASDAQ is up 139, almost 1%. S&P 500 is up 41, almost 1%. The Russell 2000, our man in the street, not quite as convinced, up 9 points, which is about half of 1%. In the commodity basket, crude oil, rocking it, up $2.48. Not that that's good news, because ultimately that translates to the gas pump. Crude trading 75.66 last. Did have crude inventories today, and that puts crude up almost 3.5% on the session. Gold is up $3.30, trading 24.35 last. Silver did not get the memo, I guess, down 16 cents, trading 27.05 last. In the Asian markets at the close, the Nikkei posted a gain of 414 points. It's 1.25%. Shanghai rose just 2.5 points. The Hang Seng gained 230 points, which is almost 1.5%. And in the European markets at the close, FTSE up 140 points. It's 1.75%. The DAX up 255 points, 1.5%. And the CAC up 135 points. And for the CAC, that's almost 2%. So we had a green day in Asia. It was a green day for the UK. And so far, it's definitely a green Radio Wednesday here in the US of A. So let's take a look at some of the news behind the numbers. The market's response to the weak July jobs report has fueled concerns that the Federal Reserve made a mistake holding rates at a 23-year high at their most recent meeting. And now talk in some corners of the investment world has shifted from the timing of rate cuts to the timing of a recession hitting the U.S. economy. But several economists and equity strategists believe that while the risks of recession have risen amid weakening economic data, the last few days of market action have been an overreaction. In an interview today, Apollo Global Management chief economist said the market is pricing in too many cuts. Investors quickly moved to price in more than 4 interest rate cuts in 2024 after Friday's jobs report, up from the 3 seen after the Fed's meeting July 31st. Some market commentators have even suggested the Fed should cut before its September meeting. Given the volatile swings seen in the market bets on Fed cuts over the past several trading sessions, investors should be taking what the market is projecting with a grain of salt. Data shows consumers still spending on activities like flights, dining out, and hotel stays to make the case that the consumer is showing few signs of pulling back at this point. Well, that's because they got an increase in their credit line, and now they're spending that. America's $35 trillion in debt. The average American household is pretty deep in the red. Now, the plutocrats, they're not feeling any of this. Doesn't affect them. When's the last time Kamala had to go buy groceries or put gas in her SUV? Never. Across the board, there's just not much evidence of the economy either being in a recession or being on its road to entering a recession, according to some analysts. The most troubling part of July's jobs report was a rise in the unemployment rate to 4.3%, which triggered a closely followed recession indicator. The report also showed monthly job gains slowed to their second lowest level since 2020. But to Deutsche Bank senior U.S. economist, the report still tells the same story of a labor market being propped up by lack of layoffs as opposed to strong hiring. Composition of the rise in unemployment is sort of different than what you would normally see at the beginning of a recession, according to this economist. The unemployment rate has largely risen due to an increase in the labor supply. People entering the labor force for the first time or just coming back to work. And don't forget the millions streaming across the southern border looking for what? Job. Little good news. U.S. 30-year mortgage rates dropped last week by the most in 2 years, reaching their lowest level since May of 2023 and sparking a surge in refinancing applications. The contract rate on a 30-year fixed mortgage declined 27 basis points, 6.55% in the week ending August 2nd, according to the Mortgage Bankers Association. The rate on a 5-year adjustable mortgage plummeted 31 basis points to 5.91%, the lowest this year. An index of refinancing jumped nearly 16% last week to a 2-year high of 661.4. Mortgage applications to buy a home increased 0.8%, first advance in a month. The overall index of applications, which includes the two, climbed 6.9% last week to the highest level since the start of the year. The decline in rates should set the stage for a modest recovery in transactions for the rest of the year, providing that recession fears prove unfounded. Well, I'd love to be wrong on that. Do you own any Intel stock? Well, they just had a catastrophic earnings report. And it's pretty hard to find an Intel bull anywhere on Wall Street. Intel shares have shed nearly a third of their value since the firm gave a grim growth forecast, announced plans to slash 15,000 jobs, and suspended a dividend that had been in place since 1992. The report was the latest in a series of discouraging updates and underlined all the headwinds facing the chipmaker as it struggles to execute an ambitious turnaround and compete in the artificial intelligence era. All about the AI. Dolce & Gabbana, not a place I typically shop, but they've launched a new alcohol-free perfume. And why is that news? Because it's perfume for dogs called Fifi in honor of Domenico Dolce's poodle. But not all vets and pet owners agree it's safe or appropriate. The perfume costs 99 euros. It's about $108 for 3.4 ounces and has been certified suitable for animal use. It follows a safe pet cosmetics protocol. Who even knew there was such a thing? Designed to ensure a degree of safety of cosmetic products for animals, comparable to that required for humans. Really? Huh. A safe pet cosmetics protocol. Well, perfume's one thing, but are we going to fake eyelashes? I mean, lipstick? That's for pigs, right? All right. Stocks climbed around the globe and bonds fell after the Bank of Japan moved to reassure markets in the wake of historic volatility sparked in part by the Asian nation's unexpected rate hike last week. Few people saw that coming. Equities extended their rebound as the panic that recently roiled the financial world subsided. The yen slumped after a Bank of Japan official indicated that policymakers won't raise rates further if markets are unstable. So the markets have to stay unstable to prevent a rate increase. We're living in some kind of crazy upside down world. Treasuries slid and roughly 15 companies looked to sell U.S. investment-grade debt as borrowers take advantage of a primary market that was left wide open after the global turmoil shut the issuance window. Japan's reassurance came on the heels of massive swings in the country's stock prices over the past week, as benchmark indexes plunged into bear market territory before rebounding sharply. The moves were compounded by the view the Federal Reserve would cut rates more aggressively, prompting traders to rapidly unwind once popular yen-funded carry trades, including crowded positions in the U.S. stock market. Nvidia catching a bounce, rising more than 2% early today, but they've now gone negative. Some analysts were calling this a tremendous opportunity to buy shares of the chip giant, which has fallen more than 20%, 25% from recent highs. According to Piper Sandler, fundamentally, NVIDIA remains the strongest player in the AI accelerator space. We also believe that strong tailwinds from the Blackwell architecture coming in October will continue to drive revenues well into 2025 as demand exceeds supply. Now again, NVIDIA was up early today, more than 2%. And now they're basically underwater, but just slightly, 0.02%. Airbnb shares fell nearly 14% today after the online travel company forecast third quarter revenue below estimates, citing slowing demand in the United States and shorter booking windows. Domestic travel in the U.S. has been pressured since the start of the year, as more Americans have grown cautious about travel spending on worries about the health of the economy. I mean, do you want to eat or go to the Bahamas? Now, how many of you have ever used Zelle at your bank? Probably quite a few of you. The Consumer Financial Protection Bureau is investigating major U.S. banks for their handling of customer funds on the peer-to-peer payment platform Zelle network. Now, this is from the Wall Street Journal. Probe focuses on JP Morgan, Bank of America, and Wells Fargo, among other large banks, citing people familiar with the matter. JP Morgan last week had disclosed in a filing that it was responding to the CFPB's inquiries regarding Zelle and was considering whether to sue a U.S. consumer watchdog over the agency's inquiries. Wells Fargo had also previously disclosed in public filings that government authorities have been probing the handling of customer disputes via Zelle. The proliferation of fraud and scams on Zelle, which is owned by 7 major banks, including JP Morgan and Bank of America, has drawn attention from U.S. lawmakers, including Democratic Senator Elizabeth Warren. Banks have argued that covering the cost of scams will encourage more fraud and potentially cost billions of dollars. Well, let's just not worry about it, right? Meta is issuing bonds, blue chip bonds they're called. Meta Platforms selling bonds in the U.S. investment grade primary market as borrowers rush to raise cash after volatility earlier this week halted debt sales. Facebook and Instagram parent company is selling bonds in as many as 5 parts for general corporate purposes, according to a person with knowledge of the matter. The longest portion of the offering, a 40-year security, may yield 1.5 percentage points above treasuries, according to the person who asked not to be identified. But a sale is a sign that their investment in AI is not slowing down and is likely to increase over the next couple of years, according to Bloomberg. Meta has an ample amount of cash, but it's a more efficient use of capital to borrow money in the bond market. Well, yeah, of course, it's always better to use OPM, other people's money. And last but not least, crude oil. Oil rallied, as I mentioned earlier, as markets globally recovered from a recent rout and investors remain on edge over the possibility of a retaliatory strike from Iran on Israel. West Texas Intermediate rose more than 1% to trade above $74 a barrel. Following a small advance yesterday, crude's recovery comes after the commodity slumped to 7-month lows amid the recent global equities rout. Bank of Japan moved to reassure markets in the wake of historic volatility after the slump was prompted in part by a mass unwinding of those yen carry trades we've already discussed. So there you have it. That's the news fit to read. Let's go to Logic 247. Logic 247, that's our 24/7 around-the-clock E-mini alert service. We're currently in week 314. Over the last 314 weeks, we've issued over 17,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week, so far, since the markets opened Sunday night at 6 p.m. Eastern, we've issued 53 alerts. We're still waiting on the outcome of 15. So we've got 38 actionable alerts, of which 1 or 3% would have been stopped out. Again, based on market structure and that very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Through last night, we were at 0. Early this morning, we were at 0% stopped out. So, a good week so far. Last week was a good week. A lot of good weeks for the last 314 weeks. Now, the logic alerts. Important that you understand the purpose of them, okay? The logic alerts give you an entry price, an initial target, additional targets in many cases, and a final trade to target. The purpose of the alerts is not for you to just trade the alerts so you don't have to actually learn how to trade. This sounds like work. The purpose of the alerts is to teach you how to read the chart. In other words, with the logic alert, I'm showing you where a great entry price is. The initial target is designed to help you get your goal for the day. And then I show you the additional targets or obstacles on the way to the final trade to target. If you use the logic alerts in that manner as they're intended, you'll learn to turn chaos into clarity when you look at a chart. You got to show up. You got to do the work. As with most things in life. Now, our other alert service, the concierge trade alerts, they're a little bit different. The logic alerts come out around the clock. It can be 2 a.m. or 2 p.m. whenever opportunity presents itself. We have traders around the globe and futures trade around the clock. Their day session is our night session and vice versa. The CTAs are published as a static report shortly after the Globex Open each evening. Last night I got them out at 6:25 p.m. So all of our members and trial members had all of these targets before the first 30-minute candle closed. We all know today's the Wednesday session, but if you come from the world of stocks, you may not know that our world, or our Wednesday, began last night at 6 p.m. Eastern. Now, when the report comes out, the first thing you want to do is get the 30-minute chart out of whatever markets you actually trade and make a note of where price is at the time the alert is published. It's always going to be between these two numbers. Draw a line in the sand at the long target, draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC is the green line you see on all of my charts, whether it's the daily chart or the 30-minute chart. BBC can be put on any chart: daily, weekly, monthly, 5-minute, tick chart, range chart. Doesn't matter, it functions the same. Markets are fractal in nature. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. All alerts, both logic and concierge, are created on the 30-minute chart. Nothing magical about 30 minutes. Simply the time frame I chose years ago, and it served me quite well. So if it's not broke, I'll leave it alone. Now, this is where you get to find out if you've learned to look left properly. To spot the entry, to spot the initial target, the additional targets or obstacles, and then of course everyone knows where the final trade to target is. If it's a long alert, it's the weekly trading zone above. If it's a short alert, then the final trade to target is the weekly zone below. Now, you've got to learn how price behaves around a weekly trading zone. That's very important, because price is always trying to reach a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. Publish the zones every week for our members since December 14th of 2009. So this December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Beyond that, just don't complicate things. Trading's not easy, but it can be simple. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, a great way to figure out which way the wind is blowing is, of course, to look at the daily chart of whatever it is that you actually trade. Futures, stocks, crypto, Forex, ETFs, doesn't matter. As I said, price flows the same across all markets and all time frames. Earlier in the week, the market found support at the previous bullish cross, and it found resistance at the previous bearish cross. Okay. There's the green line, the BBC. It stands for bull, bear, cross. When price crosses above the green line, as it did on May 3rd, then we're bullish and anticipate higher prices. When price crosses below the green line, as it did on July 19th, we're then bearish and expect lower prices. Price always reverts to the mean. Our mean is green, and it's called the BBC, bull bear cross. You'll notice that when price pulls back to the BBC, it holds more often than it doesn't. Eventually, it will trade through. But as you can see, once it traded through, it then pulled back, and the pullback held. So from April through July, we were building legs to the upside. Now we're building legs to the downside. Leg retracement, leg retracement, leg retracement, leg and a retracement. Now I posted this morning in the discussion group, both in the passport discussion group and the trial discussion group. I posted a chart and I said we have, and this was before price got up here, we've got 3 layers of potential resistance overhead. The step line, red and falling, and the 50% fib retracement. So we ran into that resistance, touched red and falling, spiked it just a little bit. Now we've backed off. I also wrote last night in the discussion group that if we take out the low of Tuesday, then we will most likely revisit the low put in on Monday. Now this low is tied into these lows back here in May. How we close today will be very important. Okay, we got a lot of wicks showing here, so that tells us we're, well, number one, we're well off the low of the day, but we're also pretty decently off the high of the day. Now, as we drop, this 62 could become potential support. Then you've got the low of today, the low of yesterday, and a break of that low most likely will take us to Monday's low. Institutional traders, the ones with huge accounts who trade an incredible size, they're the ones who literally move price. You and I, we're just liquidity in the grand scheme of things. Because of the size they trade in, the institutional traders tend to look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. So, whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it part of your daily routine to spend just 2 minutes with the daily chart before you begin trading, you'll see what's happened overnight, and you'll have a pretty good indication which way the wind is blowing. Now, when I made that post this morning and posted the chart, obviously, we had some buying going on, but thanks to the daily chart, we were able to identify the areas where the market was likely to find resistance. That is very important in the grand scheme of things. Once you get down to the range chart, you can get what's called tunnel vision, and you lose sight of the big picture. Learning to use multiple time frames is one of the best things you can do if you want to trade for a living. Now, as I said, all alerts are created on the 30-minute chart. These vertical lines separate today, Wednesday, from Tuesday, Monday, back over here is Friday. Now, these weekly zones that you see, I only put one of the lines on. This is 5251/52. This is 5308/09. This is 5382/83. Our members get the weekly zones Monday morning, 6:15 a.m. Eastern. That gives them time to get them on their charts before Wall Street even wakes up for the week. And we had that gap lower open Sunday night. And we put in a leg and a retracement. Price always reverts to the mean. In this case, there was just so much selling pressure, it couldn't quite get there. And then we put in this low. If you go look left, you'll figure out why. When the market finds support, it goes and looks for resistance, which it found. That sent it back down. Up we go again. This time we overcome the zone, but we run into the resistance from this high right here. Okay? So resistance is again going to go send the market looking for support. So the pullback to the BBC holds more often than it doesn't. Off we go, up to the zone overhead. Resistance sends us back to support. Support sends us back to resistance. Here we overshot the zone a little bit in an attempt to close that gap, which we've now done. This was the opening candle last night. Now remember, the CTAs came out 25 minutes after the open, so there was 5 minutes left in the life of this candle. Basically, we were consolidating at the weekly trading zone. Only 3 things happen at a weekly trading zone. When price meets a zone, 70% of the time it's going to be consolidation. 20% of the time rejection. 10% of the time the slice. That's when price slices through a zone like it's not even there. When that happens, price will typically, as it runs out of steam, retrace back to the zone it sliced through, and then continue in the direction of the slice. So we opened last night right at a zone, consolidating. Red and falling turned to blue and climbing, and that helped us get above the BBC. So over here, we're thinking short, expecting the zone to be support, and it was. Okay. Now, when red and falling turns to blue and climbing, although the pullback holds more often than it doesn't, this gives us a head up that this time we may trade through it, and we did. This candle opened at 52.88 and ran right up to the zone at 53.08. That's 20 points. At $50 a point, that's $1,000 per contract traded. That's entering on this candle here, 52.88 up to 53.08. Now, when price rallies up to a zone, we expect resistance until proven otherwise. When it drops to a zone, we expect support until proven otherwise. So resistance sent the market looking for support, which it found at the BBC. And then we traded through red and falling, through the zone, closed that gap from Sunday night. And the second we got that gap closed, look what happened. Price came back down to the BBC, and instead of the pullback holding, this time we traded through it. And we have red and falling overhead. Now, as price drops, you've got potential support here, 52.89. Got potential support here. Now, a note, you can see we overshot the BBC a little bit on the pullback. That happens quite often. Okay. But the pullback held because all these candles are still touching the BBC. But when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. You see that? Right there. When the blue line gets above the green line, that's a bullish cross. Okay. So the market found support there, sent it all the way up to the long target, and to close the gap. Now we find ourselves below the weekly zone, and we've got to recognize these lows as potential support. If price takes out this low, then 52.76 to 52.71, that's a nice 5-point window of opportunity right there. And if price can get through that area and get past this low, that's 52.60. Then another good window of opportunity is 52.56 down to 52.52, the zone. That's another 4 points. Okay. So could you trade from where we're at now down to these lows? You could. I wouldn't. I would wait and see if this is going to hold as support. If price can break through this, then absolutely, we've got a nice window of opportunity. Got to get below there. We'll call it 52.78. That should probably be a little lower. Yeah. And then support, potential support at 52.58. Yeah, that's pretty close. So let's call it 52.78 to 52.58. That's a 20-point window of opportunity. Okay. Check back on it, see how it does. On the Dow, here's where we opened last night. Right at the zone, consolidation. From zone to zone. Support takes us to resistance. Resistance sends us looking for support, which we found at the BBC. Pullback held. We get a leg. We get a retracement. Now, we traded through this zone, which was resistance, and then what did we do? We pulled back to it, and we had support times 2. A pull back to the BBC, we expect that to be good support. A pull back to the zone, we expect to be good support. So support times 2 sent us right up to the long target at 39,600. Now this short target, you wouldn't get interested in that until you break through this zone, okay? Now, I'm not as crazy about this window of opportunity as I was on the ES, but it's valid and it's ample to get your goal for the day. Okay, so we've only covered 2 markets, the ES and the Dow so far, but we'll be back to finish this up. Right now, Michael's going to give us a recap of everything that happened this morning in the live training room. Then we'll do some live trading on TradingView for a half an hour. And again, I'll be back. We'll finish the recap of the alerts and wrap things up with our good word for the day.
Here we go.
All right, looks good.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 7th day of August, 2024. Now, if you have not taken a free trial with us and you want to, go ahead to mytradingiq.com and right down here, click on the purple button. When you click on that, it is going to bring you to this registration page, I believe. Now, this page, all that we ask for is your name, your email, and your phone number. There's 5 multiple choice questions. Fill those out honestly, please. And if you have an interest, to give us your machine ID If you have TradingView, give us your login ID. When you do that, we'll be able to enable the indicators for you so you can get them indicating at the beginning of your trial. All right. So we had a pretty slow day today. Did get the goal for the day. Now, we had the chart set up for more volatility, which we didn't really have a lot of this morning. So we didn't have a lot of trades because we had larger time frames. This is where it's going to be going in the future. On the morning session, right? If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 7th day of August, 2024, as I said. We're up 30 ticks on the Russell and minus 13 ticks on the YM. That puts it plus 85 bucks. Not a big day for us. Today it took 17 trades in 3 minutes to get to the goal for the day. At that point, see, getting to the goal for the day is still good. Minimal number of trades, still under a half an hour. Got to the goal for the day. We were at $2,000 at that point with $100 per contract with 20 contracts on. We took a total of 7 trades this morning. So on the month now, we're at $3,780 over 5 business days, averaging $756 per contract per 2-hour trading day. On the year now, we're at $61,732 over 146 trading days, averaging $422 per contract per 2-hour trading day. Now, following the 24/20 blueprint, if you were to add 1 contract a month so far this year, you would be at 8 contracts and you'd be averaging $1,716 per hour. All right, you'd have worked 47.5 hours this year and averaging $1,716 per hour. Now, if you started with 1 contract at the beginning of 2023, like me, you would be in your 20th month right now. And on your 20th contract, at the end of the 24/20 blueprint. And you would have worked the same 47.5 hours this year, but you would have averaged $6,945 per hour because you're on 20 contracts. You worked your way up to 20 contracts like I did. All right. All right. Let's get into the trades. Now, we didn't have much for trades at all. We had 3 on the YM and 4 on the Russell. But we'll go look at them and we'll review what we had. And we'll take trades that set up while we're in the middle of it all. Like there's one right here on the Russell that's setting up right now, just about. It's going to be a black arrow if we get it down close right here. It hasn't hit the ribbon yet, so it'll be a black arrow if we get it down close here on the Russell. Now, this is a 19 range, this is a 19 range, and this is a 7 range. So we're not going to have many trades on the 19 range, all right? And the entry is going to be 2 points below the top of the bar. So 72.5 down to 70.5 is where the entry is going to be. Right over here on the YM right now, you see it starting to pull back up. It's almost at the ribbon. We are in the overbought there. That is going to be 20 ticks, 20 points below the top of the bar. So that would be 402 down to 22. I'm sorry, 42 down to 22 over there on the YM. Okay, both of those will be black arrows if they trigger. And this one hasn't painted yet, but when it does paint, it'll be a black arrow. Anyway, let's get into the actual trades that we did do. Let's go over that. Okay. Here we have it. All the trades that we did right here. Not a lot to look at today. We had a break even there. And right there, this is the YM. Right there, we had a minus 25. And then right here, we had a plus 12. That got us to minus 13. Okay. During the break, there was a beautiful blue arrow right there, a nice green arrow right there, but the outer bands were flat, so I wouldn't have done that. But this blue arrow right here, we definitely would have taken that. And we have we should have a bigger target. I think I have a 30 tick target, but we should make it like a 50 tick target, I think, the 25 by 50 bracket on this. Either way, that would have been a great trade right there. Would have gotten you the 30 ticks, and this one over here would have as well. Okay. During the break, there was another green arrow here that I probably wouldn't have taken because the outer bands were flat. Both of those are green arrows. Both of them worked out, but I probably wouldn't have taken either one. But there is a short going on right here on the YM, a blue arrow short on the YM right here. And I'm going to take that right now. I just did. Here we are. We're short right there at 226. Okay. Now what we anticipate is that that's going to get down here to 190. 190. And my target, because I only have a 30 tick target on, is down here at 196. So it should go through that target. Now, on a 19 range like this, we're going to bump the stop to break even after we get 10 ticks in profit. So it's got to get down here to 16, and that stop will go to break even. Okay. Now, with this kind of thing, if the strategy was working properly, with this kind of thing, you could program the strategy because it's such a distance from here to here. You could program it to actually bump the stop to break even automatically, so you didn't have to manage it if the strategy was working properly, but it hasn't been for months. All right, well, we just got down there, so I am going to move my stop down to break even. All right, down to break even. Now my stop is at break even, and now we're getting down here toward, this is 30 ticks right here. Okay, so I'm going to start locking in some, like, I don't know. I was going to lock in 10, but, well, now I was going to lock in 5. Now I'm going to get a break even. Right, it ends up taking me out of break even. I was going to lock in 10 on that. But anyway, we ended up with a break even on it. Right. And that was the whole YM today. That was the whole YM. We didn't have a ton of trades. Right? Not on the 19 range, we didn't. If you go back to the 7 range, there'd be a lot more trades in there. Probably a whole bunch more. The Russell, we didn't have a bunch of trades here either. But we'll go over what we did have. And here it is. We started out right here. And we had a break even on the very first trade. Then the next trade, we got a plus 20. That's where we got the goal for the day on this one right here. And then the next one, we had a break even there and another plus 10 right there that goes to plus 30 on the Russell. That one right there, I should just let it run. I was thinking that when I got into it. We did do the lesson plan. During the lesson plan, we didn't get into this trade right here, which would have stopped me out. That would have been a minus 25. And then this is during the break. We had the green arrow there. That would have given 20 ticks anyway. Green arrow here, it doesn't look like it would have gone enough into profit to get the stop to break even. That would have stopped you out. And that, well, if you took that, you had enough to get to break even anyway, maybe some profit. But right now we're looking for the pullback in here. All right, looking for the pullback in here to get an opportunity to trade. I guess we did get the black arrow short right there. And that is it is a valid trade. Okay. The ES, we didn't trade at all this morning. I remember trading it. I don't have any written down. But let's just go look at what happened with the ES. Okay, and this is on a 7 range. So the ES was on a 7 range all morning, and it had more opportunity because it was on a 7 range. Purple arrow is working out pretty well there. Purple arrow, purple, blue right there. Got us a higher swing anyway. Right in here, purple arrow working out well again. And this would have been nothing. That would have been a flat right there in the ribbon. The thing with the purple arrows, you want the ribbon to be spread with the purple arrows. Okay, that's what you want to have happen with those. And it was not spread in there. As we go further through the ribbon, the purple arrow, the ribbon was spread here. You could have taken that. The purple blue arrow right here. This was in no trade zone. This one right here would have had to put in a higher swing to be able to take anything after it. And it did not. That would have stopped you out right here, I believe. Could have gotten right back on this trade here. And a break even on that one, maybe a little bit of profit. And that was all during the lesson plan today. All right, the purple arrow here would be on the spread. Now, just a reminder, the purple arrow means price pulled back and it hit the ribbon when the outer bands were the right color. It hit the ribbon without hitting the black line in the ribbon. So it's just, a quick pullback and bounce off the ribbon with the outer bands being the right color. When the ribbon's spread like that, those usually work out really well, those purple arrows. Okay, the ribbon spread. Bam. Even this one, the ribbon was spread. Now that last one was during the break. And now all these trades right here were during the break as well. It's going back up here, just about to give us another trade right now. We're in the overbought and we're in the ribbon. So there's a chance something just happened right now to make price move quickly like that. Don't know what, but there's a chance we're gonna have a green arrow here. Probably not, but there's a chance. I don't know. We'll have to wait and see. We do have lower swings on the Russell and on the YM. No green arrow. See right there, the context get into the black line right there. No green arrow. We do have potential trades here on the Russell and on the YM, but price needs to get, the black line needs to get into the overbought, or price needs to hit the ribbon. One or both of those things need to happen to give us a trade. Okay, and neither one has happened yet. All right, so There is. Okay, this is not a valid trade here because we didn't hit the ribbon and we did not commodity overbought. I'm gonna go here and see who's watching. Okay. So we ended up with nothing right there. Okay. Nothing on any of these trades right now, or any of these markets right now. It is now 1:05, so we have 25 minutes left in here. So we'll get some more trade setups in this time. I didn't trade anything on the NQ, at least not on purpose this morning, because the NQ once again is trading really, really super thin. Now, here it is. Okay, and this is what the NQ DOM looks like. See those little numbers down there? When you're trading 20 contracts, you want those numbers to be much bigger than what they are down there. Okay, because I'd slip through all of that. Everything you see right there, I would slip. So I'd really rather not do that. You know, when I drop down to fewer contracts after the 24/20 blueprint is done, then I'll be back in that again. So does that just come out? Yeah, I guess it did just come out. Okay, so on the NQ, those of you guys who are watching the NQ, there is a green arrow short right here. That's a valid green arrow short right there. And what I'd anticipate is it would get down here below this level right here. Now, this push down did not get down below that level, so it's showing a little bit of weakness right here by not doing that. I didn't take it because I'm not trading the NQ. If I did take it, I probably would have slipped in down here, and I definitely would have stopped out right there. Okay, let's go look at a couple other things here. Look at Bitcoin again. Oh, this is on Ethereum from yesterday. Okay, so Ethereum got smashed again a little bit today. I imagine Bitcoin did too. Ethereum usually follows the Bitcoin. Actually, it's up just a tiny bit today. Not too bad. Let's look out one more chart further. Let's see. Why did I have this on here? Lift was one of the things that the guys were looking at. LY. Not in crypto, but in stocks. Lift. They were looking for the option. The options, the call options, were building up on this. So people were expecting it to do some sort of recovery of retracement of this huge move down here from the 7th of August. I guess is what they're looking for. This is what it looks like on a 5-minute. This is what it looks like on a 30-minute. Now, you're not going to get any kind of arrows in here because the context is, I mean, the sensitivity is way off. But if we throw this on there, and inside this, we turn on these things, and we take off the sniper, and we put on these other ones. See, it nailed some pretty good trades in here. This is on the 30-minute, so it showed this here back on the 1st of August, and a buy right in there. Now that buy, the stop on that buy would have been down here. Right, it would have been right down here. That's where the stop would have been. So that buy turned into, you know, the entry point would have been right in here at 1076, and it ran up to 11 and change. The short down here, the stop on this would have been hideous. The stop would be way up here on that. Okay, see the stop is $2, $1.95, just about $2 is the stop on that. It's going to be up above here. Right? It says the stop here is at 11.11, right there, 11.11. Where your entry point would have been down here at 9175. The risk reward on that is probably horrible, but I'll turn on the risk reward so we can check it out. All right, just show the risk reward. Then there it is, 0.16. That is horrible. I would not want to take that trade right there. No, if you go back in time, because this is on a 30-minute do a replay and come back here and see what happened when this one triggered. Joan, are you in here right now? It says you are, Joan. See, this is pretty simple stuff, Joan, and I'll go over this some more this afternoon, but this triggered in here, and when it triggered, what you would have had is, let me go back a little further. Okay, if you go back to like right here. All right, we'll go bar by bar right now. There's a bar, there's a bar. Now it's working off of the last red arrow over here is what it's working on, these numbers, the last red arrow that it's working off of. Okay, so if you go bar by bar in here, now right there, if that were to be a red arrow, it would give you a warning. Right here where it had this red arrow, it gave you a warning. You see how it's got that little arrow right there right now? That's not printed yet, but when the bar closes, there it is. When the bar closed, you have that. And from there, it tells you where the entry is, where the stop is, what the risk reward is on it. You really want to do trades that have a risk reward of 1 or greater, right? But this one worked out okay. The reason it's so small is because the stop is based upon in this case for short, the high of the bar right before the trigger bar. And the trigger was way down here. The stop was way up here. And your first target is at 1179. So your first target from here is right here. You see your first target is really close. So if you were to look at the second target, which is 1169, it's not really that much better, but it's a little bit better. Now your risk reward would be a little bit better. If you look in here, the risk reward I describe in here what it is, the difference between the entry and the first target divided by the difference between the entry and the stop. Greater than or equal to 1 is better. That is not a good one. But I mean, it worked out anyway. It's because the first target was so close. Okay, so hit your first target, which was that one. Hit your second target, which was that one. And your third target's 1142.5. And you hit the third target too. Now, if we stop it right here, you can put up to 5 targets in there, just like you can with the trading IQ. You can put up to 5 targets in there, and you can draw lines on the charts where the targets are if you want to. See, that was the first target, second target, and I don't know where the third target is. The third target is probably right underneath this. But the third target's here at 11.25. The next one's down to 10.1. So I don't think it made it down to that 10.1 target or the 9.93 target. Okay, but here we'll let it go and see what happens next. Doing it bar by bar like this. You know, when you can have a replay for things that are not on range bars. You have the replay available to you for that. And there it is. Bang. So 10.1 was next, and then 9.93 after that gap down right there. And if you want to see where it's getting these targets from, I'll show you in just a second. Okay, so it didn't get down to the 10.1. I don't know if it got down there altogether, but at least right here, for what I'm showing you, it didn't get down there. Now, if you want to see where these targets are coming from, you can actually put them on the chart. You draw the pivot labels like this. This is where it's getting the targets from. It'll take it a second. There they are. Okay, so if you crunch it up, you can look back and see where all the potential targets came from. Now, it's got to look way back to find another one. Obviously, it's got to look way back to find these other targets here. You know, farther than all this that we can see right here. There it is, way back in there to find those other targets. You know, but it does it for you, so you don't have to think about it. It does it all for you, and it does it with our trading IQ stuff too. It does the same thing. It goes back and looks for you and finds all those targets, so you can have extended targets. And this is with Lyft, this is with stocks, but it does it also for futures, and it does it for whatever you want to trade. There it is. We just hit all the targets, all 5 targets just got hit right there. Okay. I don't know why I got in this rabbit hole, but I did. So let's shut that off, and we'll get back out here and see if we have any more future trading going on. I think we're in a position where there was a lot of trading going on, and now we're in a position where there is trading going on. On the estimated down close right here, 278 down to 276 is what you'd sell on that. All right, now it's 278.50 down to 276.50, and I just entered at 276 1/4. Here it is. All right, and And so there, bumping my stop to break even. And we expect that is going to get down to right there. That is in tomorrow's lesson plan. For those of you guys who are in the trial, learning how to read the DOM, that is in tomorrow's lesson plan. All right, it's going to pull back up to 52.77. I just hope it goes down some before it does. I'm going to lock in one tick here. Okay, it's going to go back up to 52.77 at some point. But all right, we're out with the one tick. So 52.77 is right here. It's right at the ribbon, and that's the number that it wants to get up to. And the other number was down here at 52.73, which is one tick above the swing, a couple ticks above the swing low down here. I believe it's going to hit both of those numbers, but we are out with just one little take on that. All right, for anybody that's coming in on YouTube right now, if you have not taken a free trial lesson, you want to go to mytradingiq.com. Click on this purple button right here. When you click on that purple button, there's no credit card required for the trial, right? No credit card required for that trial. Click on that purple button, and it's going to bring you to this registration page, I think. No, actually, I think it's this one. It's this one, yeah. This registration page where all we ask for is your name, your email, your phone number, and there are 5 multiple choice questions. Answer those honestly, please. And if you have a NinjaTrader, give us your machine ID. If you have TraderView, give us your login ID. All right, whichever one of those you have, please just give it to us. Michael C. I enabled your other thing. I don't know if you got the email from me. I enabled that for you. And I don't see Kurt in here right now. But all right, that is how you take the free trial. All right, once you take the free trial, we're gonna, if you give us this information down here, we'll enable the indicators for you, so you will be able to set your charts up. Now, we did get all the way down there, guys. And 277 was the pullback number. 277 right here is still that pullback number. It's still gonna try to get back up to there. Okay. On these other markets, we did get deep enough pullback to get any trades. Now, on these larger time frames, guys, these black arrows are going to become more meaningful. All the black arrows that we skipped, there's that 277. That's pulled back up to. All the black arrows that we normally skip with the smaller time frames, they're going to be more meaningful in these larger time frames because the bars are much bigger. So the space between here and here is much bigger. You have a lot more room to get your stop to break even in there. Okay. All right. Good. All right. I'll see you in the afternoon session then, in a couple hours then, Mike, I guess, probably. All right. This is a trade over here on ES. Hang on. It is a trade over there on ES. And that number 71.25 is the number now on the downside, 71.25. Okay, my stop is at break even. I'm actually going to lock in 4 ticks on this, actually 5 ticks. Get rid of this stop. And 71.25 was the number. Did it hit it? 75 so far. Well, we got a little bit of profit on that one. These black arrows are going to become more meaningful on the larger time frames. All right. It'll be something to start considering more frequently than usual. All right. So 117. We have 13 minutes left in here, guys. Does anybody have any questions about anything? Anybody want to see any other markets? Anything like that? I want to go over anything else. I want to peek at the NQ, see if that was tradable at all. You had a blue arrow here that did not put in a lower swing. We gave you a great trade, but did not put in a lower swing until now. So the green arrow wouldn't have been meaningful. These would have been nothing because the outer bands were flat. Same thing with this over here. So this would have been the one trade here on the NQ since I've been talking. We could have another one coming up right here, right now on the NQ. We're on a 31 range on the NQ. So the black arrows are going to be more meaningful on the NQ too, being on a 31 range. Okay. All right. So this morning. So here we go. This is on the NQ right now. I don't really want to trade the NQ with 20 contracts, but with a 30 range. You can deal with the spread a little better with the 30 range bar because one, the stop is bigger, and two, it moves around a lot more. Anyway, that one, the entry point was right here, and it ran down enough to get the stop to break even already. If you didn't get into it, if you did, you still have another chance to get the stop to break even. You had another chance right there. Again, I am not going to do that. This just doesn't make sense for me. 20 contracts. If I had 5 contracts, maybe even 10, it would have made sense for me to do that, but no, it's 20. Maybe like 5 to 8 takes the spread every time. All right, on the YM now, we're pulling back up to test the ribbon. We will have a trade there if it comes down off the ribbon right now. So we're looking at 20 ticks below the top of the bar right now. It's at 117, so we'd be looking at 97, just like this on that one. Okay, 26 below the top of the bar. Now the top looks like it's at 118. It'll be at 98. Now, just to make sure, the way to test, well, there's a couple of different ways. You can go right here, I guess, and look right up here and see what the top of the bar is. That's probably the easiest way. It's 118. I guess that is the easiest way. Okay, so it just triggered me and it gave me a couple of ticks of slip there. Now my stop should be 25 ticks from there. So 96 to 116, and it should be right here. Okay, 25 ticks. And my target is at 30. I'm thinking move my target down more. Like, I'm gonna move it down to 40 right there. All right, now after we get 10 ticks in profit, the stop goes to break even on this. So when it gets down here to 86, the stop will go to break even. Did it get there yet? No, not yet. Okay, you have the same type of trade going on here with the Russell. Right now, the same type of thing going on here with the Russell. And the Russell's already gone down enough to get the stop to break even. I didn't notice. We could stop out here on the YM. Hopefully we won't, but I know we did. Okay. Now, that did not go enough to get the stop to break even. The Russell did go enough to get the stop to break even. Right? And the ES still hasn't given us anything, but it looks like the ES is starting to bounce a little bit. Now, this morning when I was looking at the bigger picture stuff, let me look at that with you again. For any of you guys that were looking at that with me this morning, when this was happening in here this morning, and I was saying, if it breaks up above, this right here is where I expected to find resistance at the midpoint between those 2 weekly trading zones, and this is the YM. If it doesn't, I was expecting the weekly trading zone, the BBC, to hold here. Now it did hold for a little while. It bounced it back up, but then it gave out, and when it gave out, it really gave out. And it's going right down to this weekly trading zone down below. I didn't see that coming this morning. All right, and on the Russell, the same thing. The Russell was coming down into the zone earlier. This big candle right here was what was happening with the Russell, and I was expecting that to just bounce off the zone. But now that it has bounced off the zone, it hasn't gotten to the point where it's going to retrace up to the BBC yet. Right? You got to see the black line get into the MA1 and then look for the retracement up to the BBC. It's not there yet. It's got to go sideways here another bar, and then that should happen. And then just start looking for a pullback up to the BBC. The NQ. Again, I was expecting everything to hold here at the weekly trading zone, and it did not. Now, this is the lowest weekly trading zone on a Wednesday. We're below the lowest weekly trading zone on a Wednesday. So that's not as indicative of a big move by the end of the week as it normally is. All right, especially with today's global climate, we'll call it global warming. Things are heating up. If it does keep going down, and it probably will, it should be down to this level right here. Should find some support down here at 18,017. Right. That's the Russell. Looking at the leg up, we're at the 50% retracement right now of this leg up for a possible bounce back up to the BBC and ribbon. But when the weekly trading zone and the BBC gave out right there, it really let it go. Yes, same thing. They were all looking the same this morning. They were all coming down to an area of support that I really thought was going to hold for all of them. I didn't think it was going to go through them all. But it dropped right through. So it's given us opportunity on the downside. Once again, just trade what's in front of you. Okay, trade what is in front of you all the time. While I was showing that, there was this here. That's the one that I stopped out on a few minutes ago. There was this one right here that triggered that I didn't get. And we don't have any other ones yet right now. Okay, no other ones yet right now. All right. So we're looking for pullbacks here. Now, in the larger time frame stuff, guys, as we start moving to this larger time frame stuff, there's going to be a lot fewer trades. All right, a lot more time to analyze stuff while the markets are bouncing around. Okay. Answer questions, do things like that. Like right now, we don't have any trades, so we'll just hang here until we do. There are going to be more frequent trades than the ones that are normally trading here using the setups that we use in here. We will find that to be true. Like, there was one here, here, and here. But well, you'll see. And the black arrows are going to be more meaningful. So we'll be taking more of these black arrows. All right, on the larger time frame. All right. So we're pulling back and about to test the ribbon here on the Russell. And we're pulling back and about to test the ribbon here on the YM. We went through the ribbon on these two over here. So now we need an up close here on the Russell. It's going to be 20 ticks above the swing low. All right, so 61.7 up to 63.7 is what you're looking at on the Russell. 2 points above. 61 up to 63. Again, 2 points above. Over here on the YM, same thing, except it's going to be 20 points above is what it is on the YM. Each tick is a point on the YM. So you're looking at possibly 138 up to 158 on the YM. Okay. and it may not end up being a trade here at all. On the Russell, it's got a low right now of 60.5. So you're looking at 62.5, right? 20 ticks above it, 62.5. And this one over here. Now, see, in this case here, the context is about to get into the black line, which is going to disqualify any kind of a ribbon trade on both of these. So I don't think we're going to need another trade here. It's time to wrap up right now. All right, so let me say, if you have not taken a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button. There is no credit card required for the trial. None required for the trial. All right, click on that, and that will bring you to this registration page. It'll bring you to this registration page, where all that we ask for is your name, your email, and your phone number. Multiple choice questions, 5 of them. Answer those. There was a trade there on the Russell. And the YM just moved up too. Answer the multiple choice questions, and if you have an Ninja Trader, give us your machine ID. If you have TradingView, give us your login ID. All right. If you do that, get your indicators indicating while you're on the trial. Right. And here, they both moved up. Okay. I actually had an order waiting there on the Russell. And stop is at break even. And I had an order waiting on the YM too. I shouldn't be in that, so I'm going to throw my stop right at break even right now. Okay. So I'm out of the YM and break even. I shouldn't be in that. The Russell was a valid trade, so I'm going to lock in something. 12 ticks right there on the Russell. Okay, now it's got a 30 tick target on it too up here. But if it gives me the 12, I'll be happy with that. The swing high is where it should go up to. It should go all the way up here to 66.4. All right. So beyond my 30 tick target, it should go another. Up here to 66.4 is where that should go up to. So I'll leave that there. I'll take 12 or whatever that is. From 62.60 up to 66.40. That's 24 ticks, 34 ticks, 44 ticks, 44 ticks. That's what it is. No, 38 ticks. I'll get it right. 38. We're gonna get 12 or we're gonna get 38. Looks like we're gonna get 12. Nope, I'm still in it. Still in it. Ready to win it, guys. I'm gonna move this one over. And what's that thing that guy used to do? Win it in a minute or something like that. To win it in a minute. Whatever. Anyway, that's it, guys. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, there's a guy, Ron, in the YouTube channel. Hi, Ron.
Hey, Ron. I don't have.
He wants to know. Yeah, that's okay. He wanted to know if there's a video that explains how the system works. But if you could just show him how to take the free trial.
I can. I will do all that.
That's the best thing. Ron, just take the trial. Go ahead. You can explain.
Go here to mytradingiq.com. Click on the purple button right here to take the trials. Can bring you to this registration page. Where all we ask for is your name, your email, and your phone number. There is no credit card required for the trial. Right? No credit card required for the trial. Just fill this out. If you have Ninja Trader, give us your machine ID. If you have TradingView, give us your login ID. When I say login ID, I mean the thing that comes up when you hover over that. I'm logged in as CFRN. Give us that information. We also have videos on the website. If you go to mytradingiq.com, there are videos here. Now, the videos are a little bit dated. You know, I was watching one with my son yesterday. And you know, they're 14 months old because I was trading 6 contracts. So they're 14 months old. So right now I have 6. And then the 24/20 blueprint, we're adding 1 contract a month. We started last year. So this was, but it's all the same stuff. You know, it's just 14 months ago, the same stuff. The more recent videos, I believe, are at the top. I believe this one is 2023-6-2, maybe not. No, this is 2024-2-7. I guess if you watch this one, I guess we'll be trading probably 15 contracts on this one. But it's all the same stuff, all right? Watch the video, especially this one right here. I'm going through something in here. I can see that the ribbon only has the leading. It's got the BBC and the trailing edge, the leading edge and the trailing edge. So I'm sure there was some lesson that I was going through there where I took the ribbon apart. But just go here to mytradingiq.com videos. You'll be able to learn something from that. Take the trial. The only real way to get it is get your hands on it, right? Take the trial and you get access to the indicators for 5 consecutive business days. All right. All right.
All right. Thanks very much.
You are welcome. All right.
Okay, you ready?
Ready. All right.
Okay, recap of the morning session.
Today it took 17 minutes and 3 trades to get to $2,000 today.
Good job.
Thank you.
All right, guys, we'll pick up where we left off. We made it as far as the Dow. And that window of opportunity that I drew in, as you can see, while Michael was giving us the recap, we filled it. I think we drew a window in the ES. We filled part of it, but not all of it. It was a big window, and often it'll take 2 stabs to get through a big window. I think we were at 52.78, and we made it down to 52.65. So from the top of the window to the low of this candle, that's 13 points, $50 a point. So you only need 2 points to get your goal for the day. But the YM gave us everything we were looking for. And the low, the zone is 39.015/20. You see right over here, this low is that low. Now, the market found support, so it'll go up and look for resistance. We're in the process of getting a bearish cross. That's when the red line gets below the green line. So there's a good chance that we'll see price, if it can take out the swing high of this previous candle, then there's potential resistance at the step line, and then potential resistance right here at the BBC in red and falling. If we go sideways, we'll definitely get bearish cross. All right, but price has got to, if we don't take out this high right here, then what's going to happen? We've got 23 minutes left in the life of this candle, so there's plenty of time to do it. But if we stall out there, then the market loves to repeat itself. So this opportunity will avail itself again a second time. I'm going to go from 39.108 down to 39.061. So that's about a 40-point window. With the Dow, it takes 20 points to get your goal for the day. On the Russell, we opened last night below the zone, below the BBC, below red and falling. Looked like the market wanted to go lower, but as you can see, now this candle traded all the way down to the zone, found support. Remember, when price drops to a zone, we expect support. When it moves up to a zone, we look for resistance until proven otherwise. So what time of day did this happen? This was the 9:30 open, which there's so much volatility for me personally. I don't do anything during the first 30 minutes, but that's just a personal preference. Michael starts trading now as soon as the bell rings. So you can see out of that pent-up volatility as Wall Street opened, we had that move down. But these lows are reconciled with these lows right here. Again, the vertical line separates today, Wednesday, from Tuesday, from Monday. Resistance always sends you to support, and support always sends you to resistance. Back to support. Back to resistance. Back to support. Back to resistance. It's a never-ending cycle. So last night, we We started to move lower, and we moved low enough for you to get your goal for the day. This candle opened at 2060.8 and dropped to 2052. Oh, I'm sorry. We opened at 2064 half, and we dropped to 52 half. So that's 12 points in that one candle right there. At $50 a point, that's $600 per contract traded. You only need 2 points to get your goal for the day. Support got us in the market looking for resistance. We had 2 candle consolidation. 70% of the time, that's what you get. Then we got through the zone, and we made it up to the target. Looks like we came maybe a tick shy, but the resistance kicked in based off the high of yesterday. That drove us back down to the BBC. Again, the pullback holds more often than not. So we got a nice bounce that took us up through the target. And if you look left, follow the horizontal line on my cursor, you'll see that we closed the gap from Sunday night. Took all the way to Wednesday to close the gap on several of these markets we've looked at. That's unusual. It is. The gap is now closed, and lower prices are probably coming. Okay? And I don't mean in this specific market, I just mean across the board. We've got sort of a double bottom going on here. After we closed the gap, we reversed. Blue and climbing was directly above price, turned to red and falling. That's bearish. So this time, instead of the pullback holding, we traded through. But once we traded through, look what happened. Price reversed and ran all the way up to the BBC, and that pullback held, which pushed us down to the zone and the previous bullish cross. So we consolidated for about an hour and a half there. Then we dropped through the zone. Okay. And now these lows from early last night, they're in play again. Okay. Now if we take those lows out, $20.49 down to $20.41. That's 8 points, $50 a point, $400 per contract traded. Earn the right to trade 10 contracts, that would be a $4,000 move. Again, it only takes 2 points to get your goal for the day. On the NQ. This was the opening candle last night. We opened right at the zone. Made a run up, leg, and a retracement. So yesterday's support held at the zone. Support held at the zone. Last night's support held at the zone. And we traded through the BBC. Consolidated for an hour at the zone. And then we pushed higher. And you'll notice, we didn't reach that high. This area right here, where blue and climbing rolls over to become red and falling. I haven't really taught you about that, but I will if you want. See how that lines up? Resistance sends us to support times 2. When price drops to a zone, we expect support. When price drops to the BBC, we expect support until proven otherwise. That support sent us all the way up to the target and closed the Sunday night gap. Isn't it interesting how they all closed basically to the tick? So we consolidated for 2 hours here at the long target. Blue and climbing turned to red and falling. So this time, pull back to the VBC doesn't hold. But when this candle ends right here, we pull up to the VBC and that holds. And that's now taken us down to the zone. We hit the zone twice. The second time we traded through it. And this low here, as you can see, market structure. It's an area where you would expect to find support. You've got a little double bottom right there with those two 30-minute candles. So we caught a little bounce. Now we had a doji. So if we want to get down below those, $113. It's about $1,200 per contract traded in that window right there. So you want to get below these lows before you get short. Because right now, if this candle comes down, that bottom right there, that low could be support and could give you a bounce. However, we're about to get a bearish cross. The red line trading below the green line, the BBC, which makes me think that this candle has a good possibility of taking out this low. And then we want to get below these lows. So, I mean, you could be real conservative with this. You could go, 18,110 to 18,070. That would be 40 points at $20 a point. That'd be $800 per contract traded. Depends on how conservative you want to be. But do I think the market will make it to the zone? Yes. And if it gets through the zone, I expect it to get to the target. But it's got to get through the zone. And this candle last night had a low of 18.30 and a quarter. So you'd want your entry to be probably something like 18,016 looks good. So that would be 40. I mean, that's $1,000 per contract window there. Got to get below that low. Okay, so that's the story on the NQ. The sell-off started back on Friday, remember? We had the gap. We finally closed the gap. That's almost like giving the market, okay, all clear. You can drop right now. The bottom can absolutely fall out. Something about the indices is not necessarily true with commodities, things like crude, gold, other markets. The indices, typically in fact, you rarely see a gap on the indices except on Sunday night and during earnings seasons when a big name reports. Whether they have a big hit or a big miss, sometimes you'll get a little gap. But with the indices, the gap typically fills within a couple of hours, sometimes within minutes. Every now and then it'll take a day or two. The fact that it's taken 3 days to close the gap on these different markets we've looked at so far, it's quite interesting. So we're approaching that window. Now again, we've got support here. So we want to break below that support. Let's go crude. Here's where we opened last night, below the BBC with red and falling. So we had a little gap lower open right there. Not much. I mean, actually, I don't even think it was a gap. It just looks that way. If anything, it was a couple ticks. So, leg, vertical line separate. Now, this is the Wednesday session, but it started last night at 6 p.m. Eastern. This candle. We pulled up to the BBC, which served as good resistance. Resistance will send us looking for support. Now, the zone is 7250/55. The low of this candle is 58. So we missed touching the zone by 3 ticks. But remember, zones are an area just like fibs. Yes, they print an exact price point on your chart, but it's still an area. Fibs and weekly zones. Support sent us looking for resistance, which the market found at the long target. Resistance sent us back to support at the BBC. Pullback held, and it held, and it held, and it held, and we hit the target again. And then we really took off. We retraced back. Now this wasn't really a slice. Yeah, you wouldn't call it a slice. We sliced through and it ran out of steam. We retraced to the zone we sliced through, and we continued in the direction of the slice. 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. It's on the 30-minute chart. Okay. Now, this is a bit of an odd formation. This step line crossed here. Okay. But there's a lot of buying pressure. We weren't able to pull back. That's probably inventories came out at 10:30. Yeah. So that puts us up here. Wednesday, Tuesday, Monday, Friday. So the step line is turning down. It crossed way earlier, but we didn't get the full pullback. But the market acted as if we did, but it's because the inventories came out. And we don't recommend trading news or economic reports because you never know how the market's going to react. Resistance to support. Okay. Here's a picture. These are the zones that were published for our members Monday morning at 6:15 a.m. Eastern. So look for price to come down to the BBC. Right now it's support times 2 because this zone is 7460/65. And then you're going to possibly have red and falling overhead. If by the time price gets to the BBC you have red and falling, then you can expect it to potentially trade through the BBC. See the pullbacks where you still have blue and climbing, or if you're pulling from below, like here, and you still have red and falling intact, it's a greater chance of it holding or not hold. In this case, not holding, because you've got all this resistance pressuring the market down right to the zone where we got a big bounce. That was yesterday. Okay, gold. Gold kind of quiet today. This is where we opened last night. We dropped to the short target at 24.23. We touched the zone at 24.20/21. Got above the BBC. The pullback held. That sent us right up to the target. We actually spiked the target right up to the bearish cross. You have a bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance. It's a perfect example. Okay. All right. And then that resistance sends the market looking for support, which it found at the BBC, but it bounced into red and falling. And when you bounce into red and falling, this is often what happens. Okay. So where's your support now? At the low of these two candles, 24.28. Now, you could go 24 to 23. That would give you a goal for the day. Problem is the low of this candle right here is 24.1. Yeah. I have a feeling price will find its way to the short target. It's got to take out this support area right here and this little support area here. That puts you at the target, and we've already traded through the target and hit the zone in this session. Okay, silver. So where we opened last night, we dropped to the short target, support, sends us up to resistance at the long target, sends us back to support at the short target. Euro, we opened right at the BBC, but we have red and falling, and red and falling walks us right down to the short target. Support sends us to resistance. These highs reflect these highs, okay, from early in the session, which pushes us back to the BBC, and then we get a leg and a retracement, and then we get a leg and then we get a retracement. Blue and climbing is directly above price. That could be good resistance, and if blue and climbing turns to red and falling, the price may very well revisit the short target. Now, for those of you who have access to the Passport discussion group or the trial discussion group, you saw the chart. You saw the chart I posted this morning, and the commentary that we had a big green candle. It hadn't gotten. It was still. It was just above the 62. Now, this doji yesterday, in the proper context, that would have been an incredibly bullish symbol. In other words, if this doji had come below the low of the week here, the low of Monday, it would have been incredibly bullish. So we did get a nice move up, but as suspected, we ran into resistance at the step line in red and falling. The next area that I outlined in the discussion group as potential resistance was the 50% fib. Came shy of touching that. Now, in my commentary last night in the discussion group, I said if we take out the low of Tuesday, it's all over but the shouting. If we take out yesterday's low, we will most likely find ourselves back at this low and potentially lower. To become a member, go to mytradingiq.com. If you have questions about membership or anything else, call us at 949-42-EMINI. And you can always email us support@cfrn.net. When you become a member, you'll solve the problem that 9 out of 10 new traders have. And that's simply they don't have anyone to teach them how to trade. I mean, let's face it, most traders are just too busy trading to spend time teaching someone how to trade. Michael and I recognized that problem early on. We met in late 2005, early 2006. And we were scrambling. You know, we had every indicator and oscillator under the sun. When there was nothing left to buy, we started to roll our own. And then we realized that we were actually going in the wrong direction. Sometimes less really is more. And that was back. We actually launched the live training room in 2008. Here we are, 16 years later. So we made a commitment that if we ever figured it out, we'd create a place where people could come and actually learn how to trade. Not be lied to, not get ripped off, not get burned, not get scammed. Family-friendly environment. By the grace of God, that's what's happened. So when you become a member, this didn't all happen overnight. There's been a lot of blood, sweat, tears, and what'd I say? 16 years. Now that's after we figured it out. There's a 2-year period there where we were kind of stumbling around in darkness. As a passport holder, you not only have access to the live training room 2 hours every trading day, but you also have access to private one-on-one mentoring. There's no extra charge for that. Strategy learned, the indicators you own as a passport holder are fluid across all markets and all time frames. Future stocks, crypto, Forex, ETFs, price flows the same across all markets and all time frames. Showed you support, resistance, back to support, back to resistance. It's a never-ending cycle. You just have to be in sync with the market. Sadly, most traders, once the market makes a big move, they buy. The market has a huge sell-off, so they get short, only to see the market reverse and head in the other direction. So it's really important to know. Anybody can enter a trade, but entering at the proper time and place is very important. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones every Monday morning, 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. Tomorrow night is Thursday night. So to you members, start thinking about your questions and have them ready tomorrow night when the workshop opens so that we can dive right in. Everything a trader needs, all under one roof at one low price. mytradingiq.com. Good word for the day. Last 2 days, we talked about the importance of caring for the needy. And we're not done. Psalm 41:1. Blessed is he who considers the poor. In October of 2022, Forbes stated there were 2,668 billionaires in the world. It's incredible to think that one individual, let alone 2,668 individuals. Now, keep in mind that these numbers are 2 years old, almost 2 years. It's incredible to think that that many people can be worth billions of dollars. I mean, if you only have $1 billion, you're like you're at the bottom of the totem pole in the billionaire club. People with $1 billion tend to have billions, plural. And by the way, if you've never watched the TV show Billions, outstanding. I don't know if they're going to do another season. I don't think so. And they kind of left us hanging. So anyway, back to what we're talking about, caring for the needy. Now, we've got all these people, almost, I'm sure it's over 2,700 by now, maybe even 3,000, worth billions of dollars, and yet there are billions of poor people in the world. Does that seem right? Now, these individuals will probably say, I worked for my money. But the question is, what responsibility does God place on the haves with regard to the have-nots? Surely donations made by even one of these individuals would eliminate the threat of starvation experienced by millions. So why are there still people who are hungry and dying of starvation? We talked about this yesterday. A child dies every 5 seconds from starvation or some malnutrition-related illness. Blessed is the one who considers the poor. In the day of trouble, the Lord delivers him. The Lord protects him and keeps him alive. He is called blessed in the land. You do not give him up to the will of his enemies. The Lord sustains him on his sickbed. In his illness, you restore him to full health. Psalm 41, verses 1 through 3. When you bless the poor, God blesses you. So as one leader wrote, make this your prayer. Lord, you promised we would always have the poor among us. Help me to make sure that the reverse is also true. That I'm always among the poor, helping, encouraging, and lending a hand wherever I can. Enable me to love the invisible God by serving the very visible poor in my corner of the world. Help me to be creative without being condescending, encouraging without being egotistic, and fearless without being foolish. May the poor bless you because of me. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.